Hello, and welcome to the episode number 5 of the Market Pulse series. And this is with FX Pesa. My name is Rufas, Kamau, Markets Analyst. So apologies for the delay. We were supposed to start exactly at 8 p.m., but I was having some trouble with the streaming software. However, eventually managed to figure this out, and right now we are live, so we can proceed right away. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. All right, so I think it's a good time to start. So on today's episode, or on today's presentation, we'll be focusing on two things. One is trading gold, the other one is trading silver. So we'll be looking at how you actually do it, how you execute a trade on gold, silver, how the contracts mean, the pips value and all that. After these, we also look at technical analysis of both gold and silver. We look at the projections for the performance of gold and silver towards the end of the year. And also you look at where to get the information that basically influences the movement of gold as well as silver. So those are the major focuses for today. And feel welcome. If you have any questions relating to the presentation, then feel free to raise those questions and I'll be responding to the questions right away. So as I already mentioned, if you have any questions, type them in the comment section. Any comment question is welcome as long as it's relevant to gold and silver. So I'll be appreciating all your feedback. So hello, Beba, and welcome to the session. So when it comes to trading gold, I'll start with a very simple thing. And this is the symbol for gold, which is basically XAU USD. So on all trading platforms, mostly you'll find that it's labeled as XAU USD. In some other platforms, it's labeled as gold, simply. So for silver, it's XAG USD. So you can literally go to the market watch, type XAU USD. You'll find the two assets. We have gold against the euro and gold against the dollar. So gold is majorly traded against the dollar. So for this presentation, we'll be using XAU USD. So currently, this is the chart for gold. Clearly, for today, you can see it has been impressive, a very strong bull run. Yesterday was sideways, the other day strong bull run. So clearly, generally, you can see for the last couple of days, gold has been moving upwards. So if you're very new to trading, I would like to mention that we have a course available on the FX Pesa live channel. FX Pesa YouTube channel. It's called Novice to Pro. This will help you understand the basic concepts of trading, understanding candlesticks and all that. So if you've gone through the course, then you'll understand all those basics. So when I talk about the course with FX Pesa, that is Novice to Pro, just 10 episodes are showing you how to use the platform, what are the candlesticks, chart patterns, and all that. So for today, I will not be doing a lot of beginner stuff. We'll be looking to understand what's happening with gold, where it's headed, and potentially identify the key price levels. So hello, Joseph. Welcome to the session. Hello, Newton. Hello, Apollo. Thank you guys for joining in the session. Let's get on with this right away. So when it comes to trading gold, there's a couple of things that you need to understand. And one of them is the contract specifications. So this is very important, especially if you're just new to trading. So gold is basically traded as a commodity. It's a spot asset, meaning that you're looking at spot prices. It's not a futures contract. So it's under the industry, precious metals has 2 digits or 2 decimal points on the pricing, and the contract size is 100. This is very important for you to understand. So the other key thing that you may need to understand is that it attracts swap, a swap for both long and short positions. So if you're on the buy side, it attracts a negative swap. And if you're on the short selling side, it has a positive swap. So if you are selling gold, you have a short selling position, then every time you hold on to the trade past midnight, you earn some swap. And this swap is cumulative and also applied 3 days on Wednesday. So besides these, the trading sessions, it's not tradable on weekends, can only be traded from Monday through to Friday. So on Monday, very early in the morning, just past midnight, this is when the market opens, runs for 24 hours, through to Tuesday, Wednesday, Thursday, and Friday closes exactly at midnight or 23:57. So as you can see, it's basically literally tradable for 24 hours, 5 days a week. So now that we have seen the contract size is equivalent to 100, the next key thing we need to understand is the margin requirements for gold. So if you execute a trade that is a full contract, let's say you go to volume, select one, and then let's say you go for a buy trade or a sell or whatever, then the margin requirement is 437.2. Sorry for that. So let's see the size of the position. So in this case, the size of the position is pretty simple to understand. It's basically one contract multiplied by the contract size, which is 100, and then multiply these by the current price or the price at which we executed, which is 1748. So I'm doing this on a calculator. Somehow you can't see this. So 1748.88, and in this case, if you divide by leverage, then you get the margin requirement. So on FX Pesa, which is a firm which is licensed and regulated by the Capital Markets Authority of Kenya under the trade name EGM Securities, we are allowed to offer a maximum leverage of 400 to 1, meaning that for every position you execute in gold and also in other currencies, you only provide $1 for every $400 worth of position. So in this case, I'll try and take you through it. So just a moment. Now you can see this. So I will be writing directly here. So position size that you have taken here is equivalent to one lot or one contract multiplied by contract size, which is 100. Sorry. Let's do this again. So one lot times contract size, which is 100 times price. So in this case, we are trading at a price of 1748.88. And this gives you a position size in dollars, which is basically $174,000, 888. So this is the amount that you need to have in your account in order to execute a trade in gold. However, since it's a leveraged account, and the leverage is equivalent to 400:1, meaning that you only provide $1 for every $400 worth of position, then the margin requirement for the trade is equivalent to 174,888 divided by 400. And in this case, the result that you get is 437.22. So you take the entire position size, you divide by leverage, which is 400, then you get the margin requirement for that trade. So in order to execute a trade in gold and trade a full contract, then you'll be required to have a free margin equivalent to $437 in your account. So now let's look at a smaller position size. So closing a position is very simple. Just click the small X button and that's it. So new order, now we trade the minimum, which is 0.01. And then we execute another trade here. And now, as you can see, we're trading 0.01 of a contract. So 0.01 times 100 times this price divided by 400 will give you a margin requirement of $4.37. So this basically means that if your account has anything above $5, then you're able to participate in the gold market. So, however, you should know that gold can be very volatile, it moves a lot, a large number of pips within a day. And this can literally double your accounts or even drive your account down to zero. So you have to be very careful when you're trading gold because it's one of the most volatile assets in the markets. So if you look at this and you look at today's price movement, you can see that the lowest price we have seen is somewhere around here, and the highest price is somewhere around here, and the difference is about 49.24 points. So meaning that if you're able to buy early in the morning at the lowest price possible today, and then you sell at the highest price possible today, if you're trading a full lot, you would make $4,924. On the other hand, if you are trading the minimum contract size, which is 0.01, then you could have made a profit of about $49.24. So the losing side is also the same. So if early in the morning, you came here and entered a short selling trade, and instead the market went up, then you could have lost $49 if you're trading the minimum lot size, which is 0.01. And if you're trading a full contract, then you should have lost $4,900 in that trade. So as you can see, it can be quite volatile. So you have to be very careful and practice proper risk management whenever you're trading gold. So now that we are through with that first part, the next part is basically technical analysis, trying to understand the movements in gold, the key price levels and all that. So whenever you're doing the technical analysis, you don't need the market notes section, you can always close it. You don't need the toolbox section, you need to have as clean chart as possible. So I like to do a top-down analysis. So I start with a higher time frame, perhaps the daily time frame, and then I move down to smaller time frames, such as the 4-hour and 1-hour time frames. So from the daily time frame, if you look at the movement of gold, especially since the February high, you notice that the gold has been consistently moving down along this trend line. And this is easy to spot. You can always draw your trend lines based on what you're seeing on your charts. So from what I'm seeing here on the lower side, we have had another trend line here working as the support level. So whenever gold hit this high and went back down, then went back up and formed another high, then these two highs can be used to speculate on the next set of highs. So after hitting this bottom here and then this bottom, then you can easily speculate on that bottom here. So notice the price goes up, gets to the trend line again, finds resistance, goes back down, and then up to the upper trend line, and then back down. So now, if we zoom on the most recent daily price action, you notice that after hitting this particular bottom here, that gold has been consistently testing this area here and finding some good level of support here. So let me try and thicken my trend lines so that they are clear to everyone. So that's my trend line here with a support around 1616. So we saw a bottom here in September, market went up in October, market bottomed at the same level, and then this month bottom at the same level. So this is a clear indication that the markets are rejecting lower prices, and now we are expecting some further upside momentum. So on a longer time frame, you might also enjoy experiencing this particular pattern here, which basically looks like a W-shaped pattern where the market goes down and then up and then down again. So there's a slight movement here where the market went up and then back down. We can see that today's or this movement towards this point here completes the W-shaped pattern, or what we call a double bottom. So after the completion of this pattern, notice how the market breaks towards the upper side, indicating that now we're in a bullish momentum. So the pattern or the bearish channel here has already been broken. Our market has rejected this bottom 3 times and now broken the upper trend line and now is accelerating higher. So one of the key things to notice is that the movement didn't just start today, started last week when the market went back, retested the support, and then moved back up, met this trend line here, played around here for a while, and then broke the level right here around for a while, then broke this level again. So now if you move to a smaller time frame, in this case the 1-hour chart, then you notice the flag kind of setups. So the flag kind of setup is very easy to understand because first, it's a very strong movement, which is unidirectional or one directional, almost like a sharp spike in the market. So immediately after the spike, you notice that the market is moving sideways along two trend lines. So this sideways momentum can be described as the consolidation level. So when the market is consolidating, it's always a sideways momentum, can take the form of a channel, sometimes a triangle. Doesn't matter, it's a consolidation. You don't want to participate here. You want to participate in the big break. So another flag happens right after this. Market makes almost a vertical movement. And then after this, moves sideways for a couple of days. So if you look at the 15 minutes chart, notice how we have moved from bigger time frames to smaller time frames. Then we have this, and also we have some form of support around this area. So market keeps oscillating up and down between the two trend lines. Eventually, this was as a result of the news that were announced earlier in the day. And as a result of this news, you can see the sharp momentum, the sharp break headed higher, and then the price of gold moved even higher. And this is the current price level. So with this, now it's easy to understand the movement of gold. So now, if you go back to the 4-hour chart and try to identify the key or the most important price levels from the 4-hour chart, then you'll notice that this particular high that we experienced back in October, this was, let me check the date, the 5th of October, this was quite significant, and the market went straight for this level, broke this level, and is now seemingly headed to another high. So the next high seems to be a previous resistance here. So around this area seems to be the next target for gold. And there's a very strong possibility that the price of gold could continue going up, especially after this strong break. So notice from a smaller time frame how the price is reacting to these levels. So if it's a straight up break, then you expect a continuation. So in this case, the shortest target seems to be somewhere around 1764. So as a result of the news that we had earlier in the day, that is the US CPI, then we have seen some strong momentum as investors are betting on a Fed pivot, and gold has been strengthening as a result of the weak dollar. So a lot of speculators are buying more gold against the dollar because they expect the dollar to weaken, whereas other risky assets to start strengthening, and gold seems to be one of them. So in this case, we expect some further momentum towards the 1764 price level. However, on the counter, there's always that potential that the market could move back, retest the area before continuing along the same direction. So right now, as you may have already noticed, the market has already started slowing down. So after this sharp momentum kept going up, now it seems like the market is slowing down as we approach midnight. So this is something that is quite common with gold. Whenever the market is approaching midnight, notice candlesticks get smaller and smaller up until the next session. That is the Japanese session. So same case here. So let's see. You'll notice whenever there's a sharp move, market slows down towards midnight. So a very sharp move downwards, then market slows towards midnight. So it's quite a common theme. So you expect the market to slow down. So main reason that this happens is that volatility tends to narrow down. So as more and more New York session banks start winding down their business, there's less market activity, and the only remaining guys in the market seems to be Sydney. So Sydney starts around midnight. Then a couple of hours later, then we start seeing the Tokyo session. So whenever both Sydney and Tokyo session are open at the same time, then volatility increases and we start seeing some directional movement in the markets. Then once we get to the London session, we see even more volatility coming in. And then the overlap between New York session and the London session, then that's when we have most of the momentum. So that's how I understand the movement of gold tends to repeat itself over time. So that's it for gold. These are the targets. From the current price level, we're looking at 1764. And if the price forms some form of reversal at the current area, then perhaps a retest of the 1728 price level. So from the 1 hour chart, you can already see it happening. So the other key option is that the market could just slow down and then form another flag just like we had here. So after the sharp momentum, market slows down and then enters this kind of formation where it's just moving sideways without momentum in a particular direction. So that this is also in the books. Another flag could form here. However, it seems very unlikely, especially considering that the news were very strong today. So what news were we experiencing today? That's the next part of the presentation. So I think we should head straight to the FX Factory website. This is my favorite economic calendar. So here's the calendar. Just go through it quickly. So I'm looking at the news today, earlier today. So this is Thursday, 4:30 p.m. We are looking at strong news labeled in red, basically indicating that there's a high potential of market volatility or high impact in the markets. So CPI is basically a measure of inflation, and you can see that in the previous month, there was an improvement of 0.4%, and also in this case, 0.4%. However, the key data point is the CPI year over year, or the change in the price of a basket of consumer goods between the last month and the same period last year. So clearly, you can see that in the previous month, inflation was at a high of 8%. So in this case, we expected inflation to slow down to 7.9%. However, the actual outcome was 7.7%. So what this means is that with the inflation at 7.7%, the Fed, or the central bank of the US, we normally call it the Fed, will basically find it very fruitful from what they are doing, which is basically hiking interest rates or monetary tightening. So with interest rates being hiked to record highs, remember last week the Fed hiked interest rates by 75 basis points to 4%. Then in this case, we expect that they could slow down the interest rate hikes since inflation is now moving in the right direction. So if you look at the graph and see what has been happening, is that when the Fed was printing more money, especially during the COVID period, then inflation started picking up from levels of around 0.4%, kept going up until it made a peak of 9.1%. So since around March, around this area here, this is when the Fed started hiking interest rates to control this rising inflation. So by the first, second, and third hikes, the inflation was still moving up, but now you can see inflation is moving in the right direction. So the focus is on the last couple of months here, where inflation is starting to slow down, showing that a peak has happened, and the Fed may not be as aggressive in hiking interest rates in the next meeting in December. So another key data point to focus on is US jobs data. Remember, the Fed has a mandate to make sure that there is full employment in the US. So with job data indicating that the job market is still very strong in the US and inflation moving in the right direction, then the Fed is expected to slow down the rate hikes. So instead of a 75 basis points hike, potentially we could see a smaller hike, maybe 50 or even 25 basis points. And this is what the investors are banking on when they are buying assets against the dollar. So from what we experienced today, immediately after the announcement of the news, gold rising against the dollar. If you look at Euro USD, a very strong rise here against the dollar. If you look at the pound USD, strong rise against the dollar. If you look at indices, this is the US 500 or the S&P 500, a very sharp rise, got to this resistance, broke it, went to the next resistance, and now seems to be holding on there. So same case applies to the NASDAQ index, broke this level here, went straight to the resistance, broke this resistance, went to this other high here, and now seems to be hanging around there. And also, if you look at the US 30 or the Dow Jones index, formed a very sharp spike, got to the resistance level, broke that level, and now seems to be playing around here. So it's a common theme that these risky assets or equities are basically rising against the dollar, and also other currencies are rising against the dollar, since the dollar is expected to start weakening when the Fed starts slowing down the rate hikes. So that's the explanation, and that's one of the major factors influencing the price of gold right now. So as we all know, the monetary policy by central banks tends to move in tandem or tends to move in the same direction. So if we start seeing some signs of easing of policy happening in the US, happening in the Eurozone, in the UK, then these should be very positive news for gold. So as long as there is a lot of tightening happening around, then we expect the asset to keep going down like it has been doing since March. So you can see on February, gold was very strong, but when the Fed started hiking interest rates, the general path has been downwards. So now that investors are betting that the Fed will start slowing down, that's why we are seeing a very strong bull run in gold. So the other key thing to notice is that silver is more or less like a sister to gold, tends to move in the same direction and has a very strong correlation with gold. So whatever happens to affect gold also tends to affect silver in most of the cases. So let's look at silver and see the key differences. So the symbol for silver is XAG. And as you can see, a similar thing, a spike, sideways movement, spike, sideways movement, and then another spike. So if you go to the 4-hour chart, a very strong upwards momentum in silver. So remember when you mentioned 3 movements downwards. So for silver, seems to be 4. You have the first low, second, third, and fourth. But nevertheless, we have seen a very strong sharp momentum towards the upper side. So if you look at the daily chart, then you zoom out, then you notice that silver has also been moving downwards for the better part of the year, and very strong momentum, especially after the first rate hike around March. So at the same time, if you look at the upper trend line, seems to be having a wider shape compared to gold. So remove this, as we mentioned. Don't need these when you're doing fundamental analysis, technical analysis. So this is what we are having in silver. So a spike up and then down, up, down, up, down. This was more or less of a sideways momentum along this area. So if you look at the shape and the movement of the candlesticks here, it's easy to assume that the movement generally was sideways. So market moves sideways, breaks to the upper side, gets to the upper trend line, and then drops all the way down, forms a set of bottoms here before eventually moving towards the upper side. So the set of bottoms here are indicating a rejection of lower prices. So it seems to have been slightly higher. Just a moment. So this seems to have been the bottom, and then a very sharp break happening today. So from the 4-hour chart, this is what we are having. You can already see that there's a slight upwards momentum here, following from this high here, and then combining this high with this high, and then extrapolating to the third. So when you're drawing your trend line, you want to connect as many points as possible. So this is what we have in silver. So it seems like the market has already broken that trend line, but not moved much. So if you look at the most recent sequence of lows in this particular market, then they are also seemingly forming some slight bullish trend, and this is clear for everyone. So with this in mind, that silver is moving up and then down, up, down, up, down, up along these two trend lines, then it seems like we are in a very key price level. So the price level here seems to coincide with the trend line. Market hit here first, went down, and then retested the same trend line. And now there's a potential that the price could pull back. So if the price pulls back, where does it go? So that's one key question to ask yourself. So the best way to do this is to look at smaller time frames and look at the key price levels that you've been experiencing. So if you look at smaller prices and you draw a trend line of the most recent highs, then they seem to be following a path here, and also some other path along this area here. So on the hourly chart, seems like the market is following this path and also this other path. So let's zoom in and see what's happening here. Price goes down and then up, down, forming two lows here, two highs, this high and this high, down and then up, making this trend line to be super important in this chart. So silver breaks this trend line towards the upper side, goes back, retests the area, up, retests the area, and then moves up, then down. So this is indicative of a strengthening trend. So if it's a strengthening trend, then at what point does it change? So there's a good chance that on this strengthening trend will keep acting as support. So if the market was to pull back down, then there's a good chance that we could see silver hitting this point. So the key price level here is not as much as tough to understand. 20.7, which has been around a very important price for silver, has been psychologically valued at around $20. So this seems like a key price level if the price was to completely reverse and move back down as a result of the strong trend line that we are seeing on the forward chart. However, if the price was to keep going up, then we have to base this on some previous price level. And some of the price levels that we are seeing here is this particular high that we saw back in May, and this is 22.5. This is 495. So 22.5 price level. So this seems like a key data point that silver could rally and get to 22.5. So if you are a silver trader, then there's these two possibilities: a rise to 22.5 or a pullback down to this particular trend line, and this is around 20.749. So this seems like an interesting data point. So when you're looking for key setups here, then that might be an idea to work with. So that being mentioned, now we can go back to gold. And now that we have seen the shorter term targets, then the other question is about the outlook. So what's the outlook over both gold and silver? Where are we expecting them to head over the next couple of months? So one key thing is certain. We have two data points that are supporting Fed pivot, or the Fed lowering the rate at which they're hiking rates. So if they decide to pivot, then this could be very bullish for gold and also very bullish for silver. So what this means is that if you look at the longer term trend line here, this is the weekly chart, you can see that gold was on a very strong momentum on 2018 through to 2019 and 2020 before moving here and getting into the triangle, breaking the triangle, retesting this high, and then pulling back down. So there's the potential that gold could continue rising higher, especially considering that we still have geopolitical risks. And with geopolitical risks, that is the war between Russia and Ukraine. And we also have a lot of activity happening between China and the US, and this is pertaining to the trade war. So there's still a very strong potential that gold could continue rising up. So long term, I'm expecting gold to keep going up, perhaps to previous highs. So it's not a wonder to see gold trading at this high again, and this is early next year. So as for now, there's that potential that over the long run, we'll see gold moving towards this previous high of $2,001. So one of the factors that will support this is that if the Fed eventually decides to lower interest rates. So at first, when we talk about a pivot, is a smaller rate hike. Then if inflation keeps getting lower and lower and approaches the target of 2%, then the next expectation is that things are starting to weaken. So when you start seeing the Fed lowering interest rates, then in that case, it will be a very strong case that gold keeps going higher and eventually gets to 2071. So this is purely dependent on the Fed policy. So you don't just look at Fed policy by itself, but you also compare with other central banks, majorly the ECB, European Central Bank, and also the Bank of England, the Bank of Canada, and also the Swiss National Bank. So if all of them start lowering interest rates, then this could be a very nice target for gold. So on the counter, if we eventually get into a bad recession and these central banks keep raising interest rates, then the overall direction will be back down. So as we move towards 2023, if the Fed keeps hiking rates, and this is still a possibility, then a move back down to the previous low in the short run be something to think about, back down to 1616, and also way lower to 1561. So these two seems like potential targets for gold. If the Fed keeps on strengthening the dollar, then you could see gold moving back down. So as for now, it seems like the only direction is up, Technically, a channel has been broken, so this momentum is expected to continue moving upwards. So shorter term targets, of course, it's not going to have any other straight line. So 1800 after we get to 1756 could also be a target. So after we get to this, then potentially these, and of course, in between, we should be able to experience some form of pullbacks. So when markets are going up, they don't move in a straight line. Sometimes they pull back and then move up and so on. So you have to understand your waves, consolidations versus impulse movements. So as I already mentioned, if you have any questions relating to the presentation, feel free to type the questions in the Q&A section. Not Q&A, but the live comment section, and I'll be responding to those right away. So same case with silver. In this case, if you look at the longer term movement after this high, the bearish momentum here, then eventually moving towards next year. Then by mid next year, we would be seeing silver trading at this high, and this is dependent on the Fed again. So if the Fed pivots, stops hiking interest rates, moves the opposite direction, and starts lowering interest rates, then the overall expectation is that silver keeps on rising and eventually gets to 29.79, which is very close to a round number. So in this case, I think of $30. So $30 could be a potential target for silver. However, if dollar keeps strengthening, then the most recent low is a direct target, which is around $18.0 per ounce of silver. One last thing before I end the session is that whenever you're trading silver, it's important to know that it has a peak value of five times when compared to gold. So if you're trading one full contract of silver, let's say we go for a buy trade here. In this case, when the market moves by 21 points, in gold, it will be $21. However, for silver, it's 5 times. So in this case, as you can see, 31 is equal to $155. So the main reason we have these, it's as a result of the contract in silver. So if you go to silver USD and go to specification, remember I mentioned that the contract size is very important. So this one has 3 decimal points, basically adds a 0 to the contract size. So in this case, when you focus on the contract size, it's not 100 as in gold. In this case, it's 5,000. So when you trade one contract of silver, you're basically trading 5,000 ounces. So by trading 5,000 ounces, you're taking basically buying a very big bag. So every time the price moves by a slight movement, then the value is often 5 times higher than gold. So it's also very volatile, and it's not for the weak-hearted. So if you have a very small account, then you should probably never touch silver. However, if you have a comfortable account, let's say $5,000 and above, then it becomes easy to trade silver without worrying about as much volatility as other assets in the markets. So if you have any questions, let me check on them and try to respond as we approach the end. So good question. Do you guys trade live on the stream? No, as a result of our regulator. So remember, FXPesa is regulated by the Capital Markets Authority of Kenya. We are not allowed to give investment advice. So all this content that we do is purely educational to help you understand the key contexts, to help you understand the fundamentals and where we get the information, how we narrow down this information to understand the price action movements, and also the key trading price levels, such as the support and resistance levels. So this is purely educational. It's not a recommendation to trade. And most importantly, it's not an advice to trade. So today's lower CPI has rocket-fired stocks, indices, and gold will crash the DXY. I'm biased towards bearishness of these assets. I'm aware of supposed Fed pivot. So my explanation here basically expects that the market will be pricing in a Fed pivot. So the Fed pivot basically means that we'll be seeing stronger equities and a weaker dollar. So when investors are focusing on these data points, such as the NFP last week and the CPI data today, they want to react to that information earlier before the Fed actually does it. So by the time the Fed is doing the pivot in December, the market will already have priced in that news. So instead of the market reacting to the Fed pivot immediately, it will have reacted, and most probably the market will react in the opposite direction. So if the Fed does its meeting in December and decides that no, we are no longer doing 75 basis points, we are doing 50 basis points, well, people will be expecting the dollar to strengthen. It will already have strengthened, so it will be moving in the opposite direction. So, as people expect the dollar to weaken, it will already have weakened as we are experiencing today and perhaps towards the next week. So in that case, the market reaction will probably be in the opposite direction. So you have to be prepared that investors are pricing in the Fed hike today and perhaps for the rest of the week and towards next week. So a good question from Dixon. I'm a beginner. How can I trade successfully? So as I mentioned, on this particular channel, that is the FX Pesa channel, I have a full course for you to help you begin trading. It's called Novice to Pro. It has 10 episodes. Go through the first through 10 episodes. Practice the ideas therein on your demo trading account. And once you understand how this works, then these sessions will make sense to you and it will become easy for you to trade successfully. So that's available on the FX Pesa channel. So another comment here from Apollo: with no change in fundamentals like looming recession, would the earnings reverse? Interest rates still too high, plus disappointing earnings, especially for the fund stocks. I'm expecting that a Fed pivot might mark the bottom of the bear market. So generally or historically, bear markets last for a year. And right now in November, we are approaching December. And this basically represents the end of the bear market, potentially. It's not yet the bottom. I cannot confirm this. But from what we are seeing, let me show you the daily chart for the US 500. Somehow it's not loading enough. Don't know why. Same case with US 30. Wonder what just happened to my data. So just a moment. So US 500. Okay, let's try and use the browser for easy data. So just want to show you what has been happening this year. So this is the SPY ETF trust. If you look at the 5-year performance, you will notice that we have been consistently in a bull market. We had a recession here in early 2020, the shortest recession ever in the markets. And then the top was hit around 31st December 2021. So from December last year, we're already approaching December, then that will be 1 year in the bear market. So the average bear market lasts for about 1 year. So now that we have been in a bear market for a year, if you look at the performance year to date or the last 1 year, the SPDR 500 ETF is down 15.96%. So this might mark the end of the bear market and the beginning of a bull market. And if this is so, then it makes sense to start betting on the next bull market. And I believe this is the phase we're experiencing in the market right now. So I hope that answers your question. So eventually the fundamentals will change. So if the Fed pivots and eventually stops hiking interest rates, then the next direction is downwards. At some point, they will start promoting economic growth. So if the stocks are weakening, the outlooks for earnings are getting lower and lower. At some point, they'll start lowering interest rates, make capital available to expand the stock market. So at the same time, there's also a political cycle. Remember, we just saw the midterms yesterday. And now, the remaining 2 years are very important for the president of the US. He'll be looking to start his campaigns. So he wants a strong market, a strong stock market to accompany his campaigns. So you don't want to do campaigns when the stock market is really weak. So at some point, the the stocks will weaken, that is the earnings, and Fed will lower interest rates to support economic growth, and that's my projection for now. So is it always determined that when the inflation rates decrease, indices or metals like gold will go up? No, it's not always determined. Remember, this is a bet on the Fed action. So as we always say, don't fight the Fed. So if the Fed is interested in strengthening the dollar through rate hikes, then you trade in that direction. So now investors are betting on the Fed reducing the rate at which they have been hiking interest rates. And when this happens, then this is expected to strengthen equities, because it's basically in preparation of lowering interest rates. So it's basically following the direction of the Fed or Fed policy in order to be moving in the right direction. So I'm hoping that the session was fruitful. Hope you learned something today. Thank you very much, guys, for your time. I hope to see you on the next session. Correlation between gold and Bitcoin. Right now, since whatever is moving the market majorly is the dollar strength, then these assets are traded against the dollar. So when we look at the price of Bitcoin and we say it's 17, 18,000, it's $18,000. So if you look at the price of gold and we say it's 16, 1700, it's $1,700. So the counter currency is the dollar. So if the dollar is strengthening, then it's affecting all these other assets, making a positive correlation. And if the dollar is weakening, then these other assets are strengthening, making a positive correlation. So yes, as at right now, there's a very strong correlation between gold, S&P 500 and Bitcoin, besides the market crash that was happening in crypto since Monday as a result of the crash in FTX. So the crash in FTX was only affecting crypto. It was not affecting gold or the S&P 500. So in this case, we'll be expecting some form of a correlation to resume once we are done with this sell-off. So thank you, guys. Thank you for your questions. See you on the next session.